Right, so now let's move to working 4. Okay, for working 4, as you see, we need to calculate the new shares issued. If you look at the question, okay, in the notes, what can you see? You can see that 10,000 shares issued on 1st of February at a price of £1 per share, and this transaction hasn't been recorded. And remember, this is transaction hasn't been recorded. This means we need to record it. So as I mentioned, we need to do working for it, and also should be included in the equity, of course, statement of change in equity. So £1 is the market value. So let's do it. So this is the layout. This is the layout. You need to do it. Yeah, this is the layout. You need to do it. First of all, number of issued shares is 10,000 shares, isn't it? 10,000 shares. What is the market value? If you remember, the market value is £1. If you remember, and the nominal value is what? Is the 50 what? The 50 pence. So in this case, you'd see market value £1 and the nominal value 50 pence. So the share premium equal the difference between the market value minus the nominal value. So in this case, you would say the market value is £1 minus the nominal value is 50 pence. So that goes to 50 pence premium value. So what you need to do right now, you need to multiply the shares, the number of shares, you multiply by the market value, nominal value, and premium value. If you multiply it by £1, which is the market value, it is the market capitalization, is £10,000, which is the market capitalization, right? So the market capitalization is divided into the share capital, a new share capital, and a new share premium. Yeah, so the new share capital will be £5,000. Why? Because 10,000 shares times 50 pence, which is the nominal value. So nominal value is based on share capital. So when you calculate it and multiply it by nominal value, so we mean the share capital. So the new share capital equal £5,000. That's fine. And the share premium, if you multiply 10,000 shares multiplied by 50 pence, which is the premium value, so equal again £5,000 here. So if you add them together, so that's £10,000, and this is the market capitalization. The market capitalization. Okay. Here we go. So this should be comes under statement of change in equity, the market capitalization, and here we go. It depends, of course, it depends here, where is it? Yeah, here we go. The share capital, in new share capital, issue new share capital 5,000, and as you see here, share premium, new share premium 5,000, as you see. Yeah, under statement of change in equity. Cool. Right, working 5 talks about dividends. Working 5 talks about the dividends. Okay. When it comes to dividends, guys, where is it? Here we go. So in the last note, what it mentioned in the last note, it mentioned that the directors proposed and agreed a dividend of 10 pence per share, which will be paid out after the year end to all shareholders registered as 30th September 2020. So remember, this is, we need to do working for it. We need to do working 5 in order to calculate the dividends. We need to calculate the dividends. So how can we calculate the dividends? Right. First of all, what is the share capital here? from the trial balance. From the trial balance is what, as you see, is £50,000. Can you see, guys? Can you see? £50,000. This is the share capital from the trial balance. Yeah. In this case, what you need to do, first of all, in order to calculate the dividends, what you need to do, you first know you need to calculate the number of shares. So when we calculate the number of outstanding shares, we calculate them based only on share capital. So share premium is not included. So first of all, what is the share capital from the trial balance? Is £50,000. As you see, it's £50,000. So if you add on the top of it is £5,000, which is the new share capital. If you remember the new share capital we calculated in working 4 under the new share capital, that's equal £55,000. So that's the share capital. The share capital equal £55,000. So we need to find the number of shares. What you need to do, very simple, you need to divide it by the nominal value. Yeah, simply you just need to divide it by the nominal value, which is 50 pence, the nominal value. In this case, £55,000 divided by 50 pence, that goes with 110,000 shares. 110,000 shares. So far in the business in the Orange PLC, we have 110,000 shares, and of course we need to calculate dividends. If you look at the question tells you that they pay dividends per share 10 pence, 10p. So if you multiply 110,000 shares, if you multiply it by 10 pence, you should be able to find this is £11,000, which is the dividend payable. So guys, be careful. A lot of questions here that when it comes to 10 pence here, so a lot of students they get confused how to do it. Some students they multiply by 10, but remember when I say 10 pence, I mean 0.10, isn't it? 0.10. So be very careful. Be very careful of this, because some students they calculated they multiply by 10, not 0.10. Remember, guys, be careful. So £11,000 is the dividend due, and as I mentioned in the notes that the dividend should be going to statement of change in equity, but also in current liability. So as you see, here we go, dividends W5 should be recorded under statement of change in equity under retained earnings, but also should be included under the current liability because it's obligation on the business. Great. So the last workings here is the cash. If you look at the cash and cash equivalents, you can see that where is it? Here we go. Cash and cash equivalents, guys, as you see in the question, equal 50,000. That's from trial balance, 50,000. Can you see? Here we go. That's from trial balance. So now, why do we need to do workings for cash? Very simple. Why? Because did you remember when the business they issued shares at market value in W4, the one we do it? When they issued 10,000 shares in the market, this means at £1 the market value. This means they what, guys? They what does that mean? This means they had cash of what? They had cash of £10,000 extra cash because they sold it to the market, to the public. Yeah. So in this case, there's extra 10,000 here, should be here, and the total cash should be 60,000 and not the 50,000. And of course, as we mentioned, that should be recorded under current assets, 60,000. Okay. So yeah. So here we go. We calculated all the workings, guys. 6 workings we calculated, and this is exactly what you need to do, guys. So once you've done the workings, what you need to do, you need to start and doing the statements. And remember, I told you many times, so when it comes to the statements, it's really straightforward and easier, because once you've done the workings, it just makes your life easier to do the statement straight away, really. So the first statement you need to do it is a statement of profit and loss. And when it comes to the statement of profit and loss, so don't forget to write the title of the statement and the date, because it's 1 mark on the exam. So you start with revenue sales revenue, which is in the question, if you remember. And if you remember, you need to take away the cost of sales, the one we calculate in W1, in order to reach to gross profit. And then you need to, from gross profit, you need to take the distribution and administration expenses, the one we calculated in W2. And after that, you should be able to find that the operating profit equal 7,500 pound. Of course, after this, you need to take away the taxation, which is the one, if you remember, in the question here. If you remember, we said that taxation, where is taxation? Here we go. Taxation should be on the bottom of statement profit and loss, but also in current liabilities. So this is the total profit for the year is 6,500. 6,500 is the total profit for the year, is 6,500 pounds. 6,500 pounds. So now, when it comes to the other statement, which is a statement of change in equity. The statement of change in equity. When it comes to statement of change in equity, right? So what we need to do, guys, if you look here, right, we've got here share capital, share premium, and retained earnings. Can you see here? And let me show you something easy, makes your life easier. Right, look, statement of change in equity, share capital, share premium, retained earnings, and these the things you all the time is fixed here, including the balance brought forward. Yeah, balance brought forward. We've got the issue of new shares. We've got the dividends, W5. We've got the profit for the year, and we've got the balance carried forward at the end of the year. So can you see the X here, guys, in each box? All these X's in boxes here, the XXX, these you don't write anything there, any number there. So these are not usable, right? So don't use them. Yeah. So remember this. Now, when it comes to share capital, let's do share capital. Share capital, the balance brought forward, which is the beginning of the year, equal here we go. Share capital beginning of the year equal 50,000 plus the new share capital, the one we calculated in W4, if you remember, the 5,000, so equal 55,000. Share premium, if you look at the trial balance, we don't have any share premium. Opening inventory, opening balance for share premium, nothing, zero. For issue new shares, we have share premium, the one we calculate in W4, if you remember, the 5,000, so equal 5,000. So when it comes to retained earnings, so this is the formula which you need to do. So the opening balance for retained earnings, okay, if you look at the question here, you'll see the opening balance for retained earnings equal 35,000. So here we go, 35,000 pounds. Can you see, guys? Can you see? Right. So now what happens here? What happens here? The dividends. What happened here? The dividends. So the dividends, the one we calculate in W5, I don't know if you remember W5, here we go, that 10, where is it? Here we go, the 11,000 pound, the dividends, that should be here. We take it away from the retained earnings and we add the profit, 6,500, from where, guys? 6,500 from here. Yeah, from that statement profit or loss, the statement we have done, okay? If you add them together, this means you should be able to find 30,500. 30,500. 30,500. So, can you see this statement? Can you see statement of change in equity? Share capital 55, share premium 5, retained earnings 3,500, total 9,500. So this is statement of change in equity, the second statement. When it comes to the third statement, statement of financial position, so if you go to the last section here, under the equity, you just copy paste the numbers from statement of change in equity, right? You just copy paste the numbers from the statement of change in equity. So in this case, what's left in the statement of financial position? The assets and liabilities. The assets and liabilities. Here we go. Lovely. So the non-current assets, if you remember, the non-current assets, the one we did it in W3, if you remember, under property, plant and equipment. Current assets, if you remember, we have a closing inventory, we have receivables, and we have cash and cash equivalents. If you add them together, that makes 95,000. So if you add the non-current assets with the current assets together, so that makes total assets of 157,500 pounds. Okay. In terms of current liabilities, we have a trade payable, so from the trial balances straight away. We have taxation payable, if you remember, and we have also dividends, because we said dividend payable should be under current liability also, and also statement of change in equity under retained earnings. So if you add them together, this is 17,000 pounds, which is the total current liabilities, the total current liabilities. So the net current assets equal the total current assets, which is 95,000, minus the total current liabilities, 17,000. That goes to 78,000 pounds. Total assets minus current liabilities, so total assets equal 157,500 minus total current liabilities equal 17,000. Non-current liabilities, we have long-term loan. If you look at the question, and the trial balance is 50,000, you listed here. And the total liabilities here equal 67,000. Why 67,000? Because we have the current liabilities of 17,000 plus the non-current liability 67,000, so we should be able to make the 50,000 the non-current liability plus the current liabilities 17,000. That makes the total liabilities of 67,000. And net assets equal total assets. Total assets 157,500 minus total liabilities 67,000. That goes to 9,500. 9,500. So 90,500 pound is what, guys, is the net assets. So as you see, the net assets equal the equity. That means the accounting equation is balanced assets minus liabilities equal equity. So as you see, guys, I know it's a bit challenging. You think, oh my God, how can I do all of this? How can I memorize all of this? How can I do this? I can't do it. As you see, there's a lot of things going on and a lot of work to do, isn't it? But my advice to you, very simple, right? The only way to get it right to practice. Unfortunately, this is accounting, and accounting only you get confident when you practice. As much as you practice, as much as you be confident. So you've got the templates in MBT, so try it in your own once, twice, 3, 4, 5, 6, 7, 8, 9, 10 times, and I'm sure 100% you will get it at the end. And when it comes to the exam, you will just makes your life easier, because if you haven't practiced, you're not confident in the exam, you'll be stuck, isn't it? Because considering that the exam will be time pressured. Yeah, true, yeah. So this is the way, guys. So yeah, so any question, let me know. Yeah, any question, let me know. So we'll see you next week in the seminar, but otherwise have a lovely day. Take care, guys. God bless.